this vote for Brexit is really going to open a floodgate of similar referendums and protests and arguments for other countries leaving or restructuring their role in the EU. And I do believe that is going to usher in a real currency crisis in the coming years.
A must-own gold stock, K92 Mining, trading on the TSX Venture under KNT. Head of exploration is the man responsible for the largest gold discovery in history. Gold production will commence in the matter of weeks for this new company, headed up by an all-star management team. Their core project and mine was purchased by Barrick Gold at the height of the bull market in 2006 for $142 million. At the depths of the bear market, this management team swooped in and bought this project for $2 million last year. To learn more about this soon-to-be mid-tier gold producer with a cash cost estimated at a low $600 per ounce, visit crushthestreet.com/gold IPO.
Hello, everyone, and welcome into crushthestreet.com. What a day in the markets, and just what a day in general. A lot of craziness going on, and to make some sense of it, we have Eric Hadik on the line, a returning guest of Inside Track Trading and 40yearcycle.com. And, for the last couple of years, Eric has been writing, and his, expectations on 2016 would be that gold, this is the golden year for precious metals in a meaningful advance in gold and silver. And we sure have been seeing that, talking about Brexit, talking about, the craziness with what we saw in China in January at the beginning of the year. And the bull market really seems like it's in. And one person who's been talking about that significantly is Eric Hadik. Eric Hadik, thanks for joining me.
Oh, thanks for having me back, Kenneth. Always enjoy it.
Eric, I've been looking forward to speaking to you because you are, one of the guys who've been saying, hey, 2016 is going to be and you called it prior to 2016, and sure enough, 2016 is here, and we're seeing big moves. We saw Brexit happen, and the fear trade is in. And just kind of give us your thoughts on what we're seeing with gold here and just this 2016 year in general.
Well, I should even put that in context. And the whole time from 2013 through 2016 that I was discussing that, I identified that in a couple of ways. One was I thought 2016 would be the first sustained, at least 3 to 6 months advance in gold that we would see since 2010, 2011. Within that context, I viewed it as merely a precursor, a harbinger of what I think is to come in 2017, 2018, possibly into 2019. And there's different ways of looking at that, but even if you look at it from a wave structure, and I don't know how many of your listeners may be familiar with the theory of Elliott wave, but in that theory you get an initial impulse wave, impulse being in the direction of the prevailing trend. You get that initial rally, that initial move, and that kind of confirms to you that the tide has turned, that in this case the bottom is in, but it is merely a sign of things to come. And after that, you'll see a retracement or consolidation for often as long as the initial advance took. But then you prepare for what in Elliott wave terms is the third wave, and that's the dynamic wave, the more accelerated one. It's when the buyers really start to flock into the market, often once the market has exceeded the previous high, the high of that first wave, the one that I'm expecting in 2016. So it was an expectation that we would see an initial advance that was the strongest advance in at least a few years, but also that was just a first step in a bigger process where I do think that gold has far more upside potential looking out over the 2 to 3 year horizon, and that a lot of that, I think, is going to be tied into fear and anxiety over fiat currency.
Eric, so talking about this fear, I want to ask you about Brexit. I mean, we're living in a post-Brexit world now, and I don't know how big of a deal that was to you, if it was just kind of a sign of the times, one more confirmation of this whole economic mess we're in. But you know what? We did see gold and precious metals react pretty strongly to Brexit. Let's talk about this economic fear that we are seeing, and just your thoughts on Brexit as in general.
Well, I would have to go back a little bit to give the big picture scenario of what I have been describing really for the last 8 to 10 years, and how Brexit really plays into that and reinforces it and corroborates what I'm looking for out over the next 3 to 5 years. But one of the big longer-term scenarios I've been talking about is that I thought from 2011 to 2018, and this is based on a host of things from all types of cycles, fundamental things that were starting to play out, economic indicators. But I thought from 2011 to 2018, we would see a serious downturn in the mentality of the European Union, and that by the time that 7-year period had transpired, that the European Union would be on the brink of breakup or dissolution, but would most likely come back from that in a new form and a new structure than what was currently in force, and within that overall structure, I thought that you would see focus on different nations within the EU. We saw really going back to 2010 was when Iceland had a serious economic meltdown. Then in 2014, you had the whole Greek debacle. And as we were going through 2015, 2016, I kept talking about this just uncanny cycle that has governed the UK, governed the British pound, and that it was all focused on 2016 for a real crescendo where those things are concerned. And one of those cycles is a very precise and very consistent 8-year cycle. And I should even preface that by saying, anyone who even doubts cycles and the impact they have could just look at a stock market chart and look at how consistent an 8-year cycle has been in the major overall indices. And you go back to even the moves from 1966, a major peak, down to 1974, the major low, and then secondary low in 1982, 8 years later, and that was when a bull market really took off. And 8 years after 82, you saw a secondary low in 1990, right on the heels of the Iraq and Kuwaiti invasion. And the whole 90s bull market took off from there. And 8 years later, 1998, was when you saw a back-to-back crises. First the Asian financial crisis, then the Russian ruble crisis, and the market moving with that. And then we kind of jump ahead a little bit, and in 2000, you see a full-blown meltdown in many of the markets. And exactly 8 years after that, what do you see? Another meltdown in 2008. And you just have this consistent, there's actually multiple 8-year cycles governing different aspects of the market, but it's very hard to ignore them, and you do it at your own peril. But there's also an 8-year cycle that has governed the British pound and the British economy. And you go all the way back to even 1960, which is when France and Germany eclipsed the UK as the real powerhouses in Europe. And the British pound suffered at that point. And then 8 years later, Britain was suffering from just a debilitating financial crisis, and the pound ended up being devalued. At the time, investors threatened to abandon the currency, and America asked Britain to shut down the gold market. All of that was in 68, and exactly 8 years later, 1976, the pound was going through another crisis and plummeted to record lows and forced the UK to go to the International Monetary Fund for a bailout. That's how serious the crisis in the pound was. 8 years after that, another currency crisis in the UK. In addition, they were experiencing record high unemployment. The industrial output had plummeted 25% in a 4-year period, and the pound was plummeting. You fast forward 8 years from 1984, you get into 1992. And anyone who's followed the pound at all knows the significance of 1992, when George Soros almost single-handedly broke the Bank of England on Black Wednesday, speculating on a declining pound, which forced England out of the exchange rate mechanism in Europe. So once again, the pound was just getting pummeled on this precise 8-year basis. And you move ahead 8 years from there, 2000, the pound was reeling again, and led to an inflationary debacle in the country. They ended up with the highest gas prices in the developed world. That led to protests and fuel shortages, which then led to food rationing, and all linked to the plummeting pound. And 8 years after 2000, in 2008, the pound plummeted 35% in 14 months and hit its lowest point in over 30 years in the midst of the global economic crisis. And so, again, on a very precise 8-year basis, the pound just gets pummeled every 8 years. And so in 2015 and 2016, I kept talking about this and why I thought the pound was in for another pummeling in 2016, and why that would be the next factor in the chinking away at the European Union. And I think that this vote for Brexit is really going to open a floodgate of similar referendums and protests and arguments for other countries leaving or restructuring their role in the EU. And I do believe that is going to usher in a real currency crisis in the coming years. But it has just been, like I said, this uncanny 8-year cycle that, again, was discussed well in advance of the event. The fundamental events finally corroborate and confirm that, but the technicals and the cycles are there long before alerting anyone that's observing them to what is likely to come. So, there can be all this argument against a topic like cycles, but the evidence just keeps reinforcing their significance.
Yeah. The cycles you're talking about are really uncanny, and I can only help but look at where we are today and when we experienced the last major crash in the market. And I'm looking at Lehman Brothers and Bear Stearns and when those happened. And just as a side note, when I was looking at the global economic mess, I half expected it to be spurred here in the U.S., the U.S. being the catalyst. But what I would tell you is it looks like we might see something come out of Europe, such as a Deutsche Bank shutdown, like we saw Lehman Brothers and Bear Stearns go under a number of years ago. Do you have any thoughts on where you see the trigger point happening for this crisis event?
Well, I certainly agree with you that I don't think, I don't think America is going to be the catalyst. I've been discussing the last couple of years why I thought that the dollar would be stronger than these other currencies, and why, in effect, the dollar would be the healthiest horse in the glue factory, and that it was, again, tied into these European Union cycles that I've been discussing, and that I thought that would be in a steady decline and then potentially go into a free fall towards the end of that cycle, which is often when you see the parabolic moves right at the very end. But that the Euro and European Union would be at least one of the trouble spots between 2011 and 2018, and everything we've seen up until now just reinforces that conclusion and those cycles. So I definitely agree with the perception that we could see it coming out of Europe. I also think that there still is certainly some vulnerability where China is concerned and the whole China miracle. But there again, even that might have more of a secondary effect on someone like Europe as a trading partner, and problems that they might suffer. And if they're in a more precarious financial and economic position when the stuff hits the fan, then it would certainly be Europe that becomes the trigger or the catalyst for a meltdown.
One thing I found very interesting was when they decided to not indict Hillary got off the hook here. The stock market a few days later hit new highs. And one of the things I was speculating is that the stock markets would do better, at least on a manipulated basis, under a Clinton administration, because that's the establishment candidate. That's Wall Street's candidate. That's the banking candidate, the central banking candidate. And I would suspect that, and I don't know if it had anything to do with her or not, I just found it very, very coincidental that when she got off the hook, we saw new highs. And, even the stock market hitting new highs has brushed off Brexit to a certain degree here. So what are your thoughts on just the markets kind of here in 2016, stock markets specifically?
Well, I'm going to sound like a broken record again, but the cycles have certainly been one of the key factors there. And even in our last two interviews, when we were discussing the stock market, I explained how the indices have had a very consistent 5-month and even an overriding 10-month cycle between significant lows over the last couple of years. And you look at even primarily the late August 24th low in 2015, and then the January 20th low 5 months later. And I kept saying that I thought late June would be the next significant low, and we'd see a rally from there. And that was just when you saw the Brexit sell-off. And that's often the case, too, is when the market's anticipating something, when there's uncertainty, that's negative for the market. Once the market has established some certainty, even if it's certainty over a bad event, over a negative event, it's much more prone to rally from there. All the sellers are out of the way, or, it gives an extra day or two, just like it did with Brexit, for the panic sellers to come in. And those sellers aren't even thinking about the fact that Brexit was merely a referendum that still has to be passed by Parliament, that there still is a long process before that would become a reality. And so you get this panic selling on the news, and that's just when the buyers are waiting to come in and scoop up, take advantage of the lower prices, put on some more stock, and look for the next move up. The only caveat there is that at the same time, I've been describing how, number one, I thought that 2015 and 2016 would look remarkably similar to how the Dow Industrials looked in 2000 and 2001. And that being that every time you saw a 2 or 3 month sell-off, it would hold right near previous lows. And when everyone was turning bearish, it would turn around on a dime, head back up towards the highs for 1 or 2 months. And then just when it was getting near the highs and the bulls were suddenly reinvigorated and talking about, going to the moon from there, the market would top and turn back down. And it just did this for 15 to 18 months. And that's been the scenario that I've been looking for 2015, 2016, and I keep warning my readers that I don't think a significant sell-off is going to materialize until late 2016, something that's more sustained, that's able to really get some legs and continue down. So this 5-month cycle low in late June, we had pinpointed support in the Dow Industrials right around 17,100, and right after the Brexit vote, the Dow spiked down to 17,063, and then turned right back up and started on the next rally. But I do think that there are overriding cycle highs that come into play in very, very near future, when I think we'll see the next intermediate top in the market, and I've got some targets that I'm starting to describe to my readers where I think that we're going to see another peak in the very near future.
Well, Eric Hadik, everyone of Inside Track Trading and 40-Year Cycle. Eric, please give us your closing thoughts here, and of course, let everyone know about the services you provide, and if people want to reach out to you and learn more about what you do, just a little bit about that as well. Thanks.
Well, as far as closing thoughts, I think it's just keeping it in context, and I've been describing this period of really 2013 to 2021 and a big picture scenario that I see materializing there, and several of these events have just really powerfully corroborated that. And even when I was talking about the 8-year cycle in the UK and Britain, there's an even larger phase of that cycle that's an 80-year cycle that has governed wars in England and Europe and America dating back to the 1300s. And that 80-year cycle is coming into play again in the coming years. And that there's a very unique 8-year cycle of attacks in America that has been so consistent since the early 1950s. And I document that in the July Inside Track. In fact, any of your listeners, I'd be happy to send a free copy of that July Inside Track if they email us. But you even look at the most recent events on this 8-year cycle, and in 1993 you had the truck bombing of the World Trade Center in the underground garage, and then 8 years later you had 2001 and all the events of 9/11. 8 years after that, in 2009, was when the tactics shift, and there was a massive surge in cyber-based attacks against America. And 2017 is the next phase of that 8-year cycle, and I think that we're going to see some surprises come into play there. So it's all of these things kind of overlapping and just really pinpointing this 3 to 5 year period as a period when I think there is going to be a lot of turmoil and a lot of volatility in the market. But that doesn't mean that that any one market is going to go one direction, that gold's not going to go straight up through that whole time, and that stocks aren't going to head straight down. There's a lot of swings in there and a lot of opportunities, which is why I think that these technicals and these cycles are so important to factor into an overall trading plan. As far as reaching us or accessing a lot of this information, your listeners can do so at insidetrack.com. That's with the extra I in the middle, INSIIDETRACK.com, and or 40yearcycle.com. The numbers 40 and then yearcycle.com. And there's a lot of this analysis posted there, but for the most current and very specific trading strategy type of analysis, that's reserved just for our subscribers, so they can contact us for information about that.
Absolutely. Eric, thank you so much for coming on the show, and if anyone wants to reach out to him, definitely we'll have the links in the description area. Eric Hadik, everyone of Inside Track Trading and 40 Year Cycle, thanks for coming on the show.
Thanks so much for having me back.